Thank you so much for joining us. I'm Marlon Bowling with you, watching your grain and livestock trade. Well, on the grain side, let's take a look at where we stand in the corn and soybean and wheat markets right now. Then we'll get some expert commentary here in just a moment. On the corn market, we currently have that December contract trading 2 3/4 weaker at 339.5. Got as low as 339 today. July is down 2.5 at 368 3/4. In the soybean trade right now, you have your January contract down 4 at 970 1/4. Kind of skimming the bottom of the trading range here right now. And July down 4 at 999.5. And you know, we talked about it earlier in the broadcast. It was testing that $10 mark, and sure enough, it has given way. So now all first 5 contracts in the soybeans are under $10 once again. Let's take a look at wheat. In Chicago wheat, we have December quoted at 429. That is 4 3/4 higher. Now that one is just one tick from the high of the day. July up 1 3/4 at 470 1/4. Kansas City wheat, we have December there 430.5, up 3. We have July up 4 at 476 3/4. So a push in the wheat market here today. Looking at Minneapolis spring wheat, though, we have the December contract 1 3/4 higher at 635, so it has come well off its lows when it was lower earlier this morning, and now gone to the plus side within 2 ticks of its high of the day. By the way, cotton on December is now quoted 15 lower at 68.73 as it continues to slide. It's now near the low of the day. Brian Hoops is with Midwest Market Solutions. He's based in Springfield, Missouri. He joins us right now. And your thoughts here, Brian, on what we're seeing take place here in this grain trade in the early going here on a Tuesday. Anything noteworthy?
Well, you look at that soybean market, and we had a bearish reversal last week. That reversal extended into this week. On Monday, we broke through some more technical support. We closed below the uptrend line last week, and now we're seeing a lot more follow-through selling. And, you know, the soybean market's the one in the most jeopardy in here because the funds are holding a big net long position. The commercials are holding shorts, and they're forecasting that this is a bearish market. And I'm very concerned that unless we have some South American weather issues very quickly, these funds are going to turn into pretty aggressive sellers as they get out of some long positions, and because we have weak technical picture in here. And plus, we've gone almost 2.5 weeks now without any private export sale announcements of soybeans, so our demand is starting to taper off.
We did have an overnight sale of corn to unknown destinations, about 133,000 tons. It was earmarked for the current marketing year. Now, what about this wheat trade here today? I'm very curious about this, Brian, where we're starting to see a rally. We're hovering real close to the highs of the day in all the wheat contracts here. What happened? Do you know?
Yeah, you know, this wheat market actually has a little bit of a more friendly fundamental picture than corn or soybeans right at this time, because we're seeing the U.S. dollar weaken. That puts a little premium into our wheat prices. We try and rally or do the opposite of what the U.S. dollar does. Plus, crop condition ratings yesterday afternoon did not improve. We were expecting to see an improvement in those ratings because of some moisture and nice growing conditions in the plains, but those crop ratings actually dropped 1%. So we are actually putting in a little bit of premium because of those drop in the ratings and expectations that with a weaker dollar, we'll start to see some export business flow back to the United States. So we're seeing a little bit of buying interest.
Yeah, the biggest producing state of Kansas did go down 3 percentage points, and it's good to excellent rating down to 56%, even though over half of it is rated good to excellent. That is somewhat noteworthy there. And of course, right next to it, Oklahoma went down 1 point in that good to excellent rating, down to 41%. I did note South Dakota, on the other hand, the winter wheat there, only 14%. Good to excellent, down 5 percentage points from last week. Yikes, 54% poor to very poor in South Dakota. That's what we've been hearing over the past week. All right, we'll pause for a break here, Brian, and we'll talk about livestock when we come back on the other side of these messages. Don't go anywhere. We'll be right back. We're back with you to take a look at our livestock trade, and our very special guest joining us is Brian Hoops. He's with Midwest Market Solutions, and he is based in Springfield, Missouri, the home office there. And by the way, you have offices in, what is it, 6 states now?
Yeah, we're up to 7 states now. We
7.
just added another office out in Montana, so we're happy to have him on board.
Well, congratulations. So ever expanding. All right. Well, I appreciate you sharing that. So if anybody in the Montana region wants to get connected, they can get in touch with you through your website, I'm sure. All right, Brian, talk to me about what's going on in the livestock trade today. In the early going here on a Tuesday, we have the cattle market under a little bit of pressure. Let's take a look at our live cattle board here right now. And on live cattle futures, we are down 83 on December and down 82 on the February at 125.58. That is within a dime of our low of the day right now. April down 30 cents at 126.68 per hundredweight. If you look at the feeder cattle market here, we have the January feeders now quoted at 155.05. They got as low as 154.20. They are still down $1.93 on the day. That is in the neighborhood of almost $2 off our earlier high. March down to 142 at 153.20. So I'll stop there and pick up the conversation on this cattle market here. What's driving it here this week, Brian?
Well, there's a couple things weighing on prices. One, we are expecting cash to be $1 to $2 lower this week. Show us numbers pretty similar to a week ago levels, but much larger than last year. And, cash was down $1 to $2 last week, and expecting the same type of drop in the cash markets again this week. Fund selling also starting to weigh on the futures market, as we've seen some long liquidation by fund traders after the big rally last couple of weeks. They are getting out of some long positions, and that is continuing as the technicals remain fairly weak.
On the lean hog side, we'll flip over there and we'll examine that nearby December contract. Right now it's trading at 61.12 per hundredweight. Well, that's only 2 ticks off our low of the day now. We are now down over $1 in almost all contracts. We're down $1.18 in December. February lean hogs down 155 right now. They are showing a trade of 68.75. That's only 1 tick from its low of the day. We had a high of 70.30 in the early going. April down $1.05. What do you see technically on the lean hog charts here, Brian?
Well, on the charts, there's nothing good to talk about. This hog market has not closed higher the entire month of November so far, and it doesn't look like today is going to be the day. Hogs had a marking near low in exports last week, and this is a market that's really been dependent upon export sales to get through these big gluts of supplies that's coming at the market. And with the weekly low last week, that's a negative for this hog market. Weights increased last week in both hogs and cattle. That's also seen as a negative sign.
Yeah, you were talking earlier about the correlation between the wheat and the dollar value in between those two markets there. We can take a look at the dollar right now as far as the dollar index goes and get everybody updated. We have December U.S. dollar index futures down 410 points today at 93.970. Also, by the way, the crude oil market, in case you missed it earlier, it has taken a nosedive today. And look at December futures. Crude oil, this is West Texas crude, is down over $1.50 now, down $1.52 at 55.24 per barrel. That means heating oil is probably also taking it on the chin here, and it is taking a nosedive a little bit. December heating oil futures down almost a nickel, down 4.7 cents at 188.5. That's how they trade diesel fuel on the NYMEX. Brian, what's your website if somebody wants to find out more information about your new office there?
Yeah, you can go to our website, MidwestMarketSolutions.com, and find out information and our TV series and audio comments there as well.
That'd be great. Thanks, Brian, for all the help. Appreciate it. Brian Hoops of Midwest Market Solutions. Christina, there you go. Nosedive in cattle, also the dollar, and also in the crude oil right now.
Well, there's still more trading to go. We'll keep watching. Whew. Thank you, Markets Editor Marlon Bowling.